All right, everybody, let's get kicked off today. Thank you, everyone, for joining us again today. Really happy to have you all with us to hear Justin from LivePlan kind of talk through some basics on financial planning and using LivePlan, which is available to all of you through the ISBDC. Before we get to Justin, I want to make sure I do what I do each week, which is introduce myself first, talk a little bit about the series, and then I'll turn it over to Justin because he's way more important and we'd rather hear him talk than me talk. So I'm Jeff Zentz. I'm the Indiana director for Generator. Generator is a company based out of Wisconsin originally, but we have a hub in Indianapolis in which we typically help high growth venture backable startups. But we've realized that over the course of this COVID crisis that all small businesses need resources and support. And so we've partnered with the ISBDC to run these webinars each Friday through March of next year, in which we're going to be talking about all sorts of things that apply to the resiliency and the recovery for small businesses in the times of COVID and post-COVID. So please join us, everybody. Please know that we're going to be running these every Friday at noon. They're open to the public. Anybody that can come, we'd love to have you come and join us to learn about ways that you can position your small business to be resilient and recover from the harm that has come kind of through the COVID world. So that's my little plug. Anybody who's been here knows that plug. And so with that, I'd like to introduce Justin Hardersen. He is with ALTO Software, which are the makers of LivePlan, which is what he's going to be talking about today. And with that, Justin, I will stop my share here and turn it over to you.
Great, thanks, Jeff. So let me pull up my shared screen here. There we go. So, and thank you everybody for joining, and kudos to everybody for joining here on a Friday. Really excited to be able to present and share this content, and good on you for joining these sessions and being proactive about your business. This is really the work, being able to take a step back and really think about the big picture for your business, your venture, what's coming up, and doing things like working with the SBDC and joining webinar and content sessions like this are the things that are really going to help you to survive and thrive through these crazy times. So like Jeff said, my name's Justin Hardersen. I'm the director of LivePlan Channel Partnerships here at Palo Alto Software. We are based out of Eugene, Oregon, and Oregon is normally a wonderful, lovely place to be. In the last couple of weeks, we've been dealing with some wildfires. So these days, it's pretty rough and really smoky. But I will say today we had some rain. So this morning was the first morning in a while that I've been able to wake up and go outside and breathe some fresh air. So finally, that Oregon rain is coming through in a really positive way. So that's where we're at. That's who I am. I do have a couple of dog companions here. I don't know if you can see them in the back. They look really peaceful and quiet right now, but when the FedEx truck comes, they may start barking. So I apologize for that in advance if that happens. All right, so let me switch to our agenda. So I'm going to start with just an introduction of Palo Alto Software, who we are, what LivePlan is, and then I'm going to talk about the financial picture. So we're going to be focused on forecasting today, but I want to give some context of how that fits into the full financial picture and how seeing that financial picture can really help you as a business owner to navigate this uncertainty and really in any time just think about the future in a way that will help you make good decisions for your business. So we'll talk a little bit more about how forecasting specifically can help with that. And then I'm going to start with some general best practices for approaching forecasting exercise. Then I'm actually just going to dive right into the software. So show you kind of building a really quick example forecast in LivePlan, just to kind of show you how the software can help you put that together and how to get started, how to approach that, what to expect if you're in there working with an SBDC consultant. Then I'll show you where to find some additional resources to help with both LivePlan and just in general with your business, and open it up for hopefully some time for questions and discussion at the end. Jeff will be monitoring questions as we go. So feel free if something comes up, if I go over something too fast, if you want some clarification, feel free to put in a note or put in a question in the chat panel, and Jeff will be monitoring that, and he'll kind of interrupt me and let me know, because I do want to be addressing those questions as they come up, but also know at the end I'll try to save some time for that. All right, and hopefully at the end of this webinar, just kind of our goals, my hope is that you come away from this motivated to get started working on a forecast if you don't have one already, or if you do have an existing forecast, hopefully you come away with some tips and tricks that can help you just kind of optimize the way that you're doing your financial planning, and ultimately just show you kind of how to get started, where to find some resources, where to find some help. And if you're feeling, intimidated or overwhelmed by really digging into the numbers here, I want to really kind of defang this process and show you how simple and easy it can be, especially working with a dedicated group like Indiana SBDC and using tools that make this a little bit more simple and streamlined. You can really, even if you've never done any financial forecasting, you can do this, and you can do it effectively, and it is going to help you and make a big difference for your business moving forward. So that's kind of the goal here. So a little introduction to our company. So the name of our company is Palo Alto Software. We were founded in Palo Alto in the 80s. So the name is a little bit misleading. Now we're totally based in Eugene, Oregon. Our owner, who's the gentleman there in the blue shirt in the middle, he founded the company in the 80s, moved his family and the company to Eugene, Oregon in the 90s. And in 2007, his daughter, Sabrina Parsons, who's on his left there in the photo, she became the leader and the president and CEO of our company. So Sabrina Parsons is currently the CEO of our company, and we were really excited to be named the best family-owned business in Oregon by the SBA in 2014. We are still technically a small business, and we're still a private family-owned business based in Eugene, even though we have around 70 employees. All right, we are a mission-driven business, so our mission is to help people succeed in business. So we believe that small business owners, entrepreneurs are the backbone of our economy, of our society. It's so personally rewarding to be a small business owner, to be an entrepreneur, and we feel like the more that we can help to support small businesses, we can kind of create a rising tide for everybody. And that's why we love partnering with the Indiana SBDC, because they have a shared mission in your success. And if we can bring in some tools that can help you work with them and really help you from a tools and system perspective, that paired with the one-on-one guidance and mentoring that you're getting from the SBDC can be a really powerful combination to help you be successful. So the main tool that we have for that I'm going to talk about today is LivePlan. Another resource that we have available is bplans.com. It's all free content. There's lots of good articles, tools, templates, things like that you can look through. So if I have time at the end of this call, I'll show you a little preview of what you can find on there. But if you're taking notes, it's just bplans.com is the website. And again, there's lots of good content that you can look through. But today we're going to be focused on LivePlan. So I mentioned that our company was started in the late 80s. And so, in the 90s and early 2000s, our primary kind of flagship offering was Business Plan Pro. It was a software that you could download on a PC, and it would help you write your business plan. And so LivePlan is really, kind of business planning reinvented for the modern entrepreneur. So as a company ourselves, we had to pivot and change and shift what we were doing over to LivePlan, which is a much more comprehensive planning tool. And so we'll really dive in today and show you specifically, how that can really help you do your forecasting here. But one good thing to know is that LivePlan was built by experts. So the tool launched in 2011. So since then, we've had hundreds of thousands of entrepreneurs go through this to write their plans, to apply for funding, to do ongoing forecasting, to plan and manage for their business. And so a lot of expertise has gone into this tool that you're going to be using, feedback from partners like the SBDC, from lots of other users, from lenders and investors and banks. Feel confident as you're using this financial model that really a lot of expertise has come into building this. We've been able to refine it over the years. So hopefully it's really, really user-friendly for you as you're going through all this. All right, so we talked a little bit about our partnership with the Indiana SBDC. Again, we have a shared mission. We're really excited to be working with the network. And what that means for you, that partnership, is that you have the ability to access LivePlan through the Indiana SBDC. So normally it's a paid subscription. It's $20 a month if you just go to our website and sign up. And so if you're engaging with the SBDC, ask your advisor if you want to get set up with LivePlan and start using this and build a forecast in here. You just have to talk to your advisor and they'll work with you to get you set up with the software, which is a really fantastic thing that they're able to offer to you at no cost for a period of time. So in addition to being able to access LivePlan through the SBDC, if you want to keep using the software, it is meant to be an ongoing planning and management tool. So I'll show that a little bit when I get in there, but we do have discounts available to you if you want to set up your own account, and we can transfer any work that you do with the SBDC on their LivePlan account. If you start your own, we can just copy that over and you can pick up where you left off if you want to keep using that format. Okay, so shifting gears a little bit, and now we're going to really start talking about forecasting. And again, I want to start with the full financial picture here to kind of talk about where this fits into the whole understanding of the financials for your business. And so we have our accounting actuals. So that's looking backwards. What happened yesterday? What happened last month? What happened last year? Then we have our forecast. So thinking to the future, what's going to happen tomorrow? What's going to happen next month? What's going to happen next year? And then we have benchmarks. So bringing in, how does this all compare to what other businesses are doing? How does my performance compare to what's standard for my industry? And so if you can have a good understanding of all three of those things, what happened before, how does that compare with what I thought was going to happen, and how does that compare with what other businesses are doing, that's going to give you a really clear financial picture, give you the information that you need to make good financial decisions for your business. And the accounting actuals and the benchmarks are pretty straightforward, right? So accounting actuals, we'll talk a little bit more about that, but that already happened. You can just pull a report from your accounting software, or you can ask your bookkeeper to put together some information. And then benchmarks, of course, you just need to find those and find the information that's relevant to you. The challenging part of all this is forecasting, because now you have to think about the future and try to make some guesses and predictions, and that's hard. And people aren't very good at that. And so that's what we're really going to focus on today, is to give you some best practices and some tips and show you how a tool like LivePlan can help you to do that difficult piece and really complete that financial picture for you. Okay, so talking about the actuals, this is pretty obvious, but I'll go over this just because when I contrast it with the forecast, it'll make a little bit more sense. So when we talk about counting actuals, your numbers, you're looking back, right? What happened yesterday, what happened last year, and it's detailed because you're looking back, because it already happened. It's easy to be really detailed and granular about making sure that you're accounting for all those dollars, and it's important because that's what you use for your taxes, right? It's also accurate. So it already happened. We know what happened. So those numbers are correct unless you have some kind of math error in there. And they're static, right? They don't change. It already happened. So comparing that to your forecast, and now you're looking forward. You're thinking about the future. These are projections. These are guesses. These are assumptions. And because you're looking into the future, and because this is something you want to be able to manage and update over time, it's going to be more strategic. And what I mean when I say strategic is that, it's information that's going to help you inform your strategy, what you're focusing on as a business owner, and what you're choosing to not focus on as part of your general strategic direction. And that also means that it can be more simple, more consolidated. And so I'll show a little bit what that looks like once we get into the tool. But also know that these are assumptions. These are educated guesses. You're making the best guess that you can with the information that you have. And as you get more information, you can make better guesses and you can incorporate that into your forecast. But do know, as you're doing this, anytime you're doing forecasting, just start with the assumption that your guesses are going to be wrong, right? None of us can predict the future exactly. And so, the important part of this whole process is just going through it. It's just making those guesses, and that's going to help you think about all the variables that are affecting the bottom line for your business. So these are, it's not accurate like the actuals. You're making educated guesses, and they're definitely going to be wrong, but that's okay because you can improve those and get better over time. It's also dynamic. So you can't go back and change your actuals, but you can look forward and change your forecast assumptions. And you should be doing that. It should be a really dynamic process. And it's also can be aspirational. So, one of the forecast scenarios that I'll recommend is, thinking about what you want to happen. How does your business accomplish its goals? Like what is your ultimate goal for your business, translating that to a financial path that takes you there. So you know exactly what has to happen with your revenue, with your expenses, with your cash on hand. You'll know what all those metrics are to take you where you want to go, and you're able to do that with a forecast. And benchmarks are, again, just industry averages. So it's helpful to compare to see, okay, here are my actuals, here are all my assumptions and guesses about what's going to happen in the future. So how does that compare with what other businesses like me are doing in terms of some of these key financial metrics? So it can be helpful to understand that. Profit Sense is a great place to find some of that information. That's actually the data that we use when we give you benchmarks in LivePlan. And I'll show you where to find those in the software. IBIS World is also a great place to do some research, and the Indiana SBDC can help you to pull together some of those resources and find that information to complete that financial picture for you. Okay, so talking about the importance of forecasting. So why do this? Why is this important? And so, really the way that I like to think about it is having a financial roadmap to follow helps you to make, reduces uncertainty and helps you to take directed action and make informed decisions. So the two kind of key words there that I highlighted are informed decisions. It gives you the information that you need to make good decisions. And also, as a business owner on a daily basis, that's what owning and managing a business is, right? You're making decisions and you're taking action on those decisions. And so if this can help you to get to build some more information into that process and to make sure that the action that you're taking is directed in a way that's going to actually take you where you want to go with your business, that's why we're doing this activity. And this is a great quote by Dwight Eisenhower: "Plans are useless, but planning is essential." So this webinar, we're really focusing on the process of planning and less on the finished result of, okay, great, I have a forecast in place. That forecast isn't really going to help you that much. If you woke up tomorrow and you had a forecast, but you didn't actually go through and build it, and then if you never look at that forecast again, it's not going to do you any good. So it's really that process of planning and thinking about your numbers that is going to be valuable, because again, your forecast is going to be wrong. So really just updating it over time is what's going to help. And then another point here is forecasting gives you time, right? So one of the things that I'll talk about is when you're forecasting, you want to think about profitability, and you also want to think about cash. So this can help you kind of scan the horizon and identify potential cash flow shortages, potential financial hazards is what I like to call them. And the more time that you have once you identify those, the more options you have for tackling that. So a great kind of metaphor that I like to use or analogy here is river rafting, right? I love to go rafting, and one of the things that they teach you when you're guiding a raft is you want to always be looking 10 feet in front of you and 100 feet in front of you. So you want to deal with what's right in front of you, but you always want to be kind of scanning up and looking at the river because it's taking you there. You're going there, and if you are going to hit a rock in this raft, you want to be able to identify that early on so that you have some options. You can start angling away from it. Maybe you need to get over to the bank and pull your raft out and walk past it. Whatever it is, the further ahead you can identify that there's going to be a hazard, a financial hazard for your business, you can start to plan. And I love this picture because there's a team, right? So all of your employees can kind of start helping to row in the right direction to angle you away from that hazard. And forecasting is the process of looking 100 feet in front of you and try to identify where there's going to be some potential challenges so that you have time to respond to those and you have more options to do that effectively. If your guide is only looking right in front of them and they're not looking up ahead, you're going to hit a lot of rocks and it's going to be a bumpy ride. So this whole process is just to help kind of to do that glance forward and make sure that you're paying attention to what's on the horizon. Okay, so getting into some really practical best practices here for forecasting. This is just general, things to keep in mind as you're approaching this activity. So again, get started with your best guess and know that it's a guess. So the best thing that you can do is kind of just get through this process initially. If you don't have a forecast in place, just start making guesses. And if you're not 100% sure what is going to happen tomorrow, next month, next year, just know that that's okay. You're putting in a guess for now, and you can make that guess better as time goes. And another piece of that is don't duplicate your accounting, right? Your accounting is very specific. It's very granular. We know what happened. For your forecast, you want it to be more consolidated, more lean, as we would call it, and that's going to help you be strategic. Make sure your forecast includes both profits and cash. So a tool like LivePlan is going to incorporate both of those, so it makes it really easy for you to do that. But you want to make sure you're paying attention to both of those things. You can be running at a profit deficit for a while, and that's okay as long as you have the cash reserves. But eventually, you're going to need to be profitable in order to stay in business. But you can also be profitable and still run out of cash. So, making sure that you know the difference there and that you're paying attention to both of those things and planning for both of those is going to be really important. Another thing that you want to do that can be helpful is to create multiple forecasts. So once you have one in place, it's easy to copy that and then start playing around with different scenarios. And it's just going to add a whole nother dimension to your thinking about the future of your business in terms of your financials, and again, help to reduce some of that uncertainty because you've already thought through different ways that things could go, and you kind of know what to expect when that happens. And lastly, this is super crucial. Part of this here is to review your forecast on a regular basis and update it based on your actuals. And there's lots of different ways that you can do that. Again, LivePlan is going to make that super easy by automating some of that and giving you some good visuals to look through. But that's really the key here is, again, if you wake up tomorrow and you have a forecast, but you never look at it again, it's not going to do you any good. So this process of making sure that you're managing your business to your forecast is really what is going to help you be successful. Okay, so I wrote bike shop example here in LivePlan. We might look at that a little bit, but I think I'm going to go through maybe a different example or even start just a brand new forecast to show here. So we'll see the bike shop, but we may be doing a different type of example here in the software. But now I'll just kind of jump in and start going through that. So I'm going to share my other screen here. And we're going to jump into LivePlan and start actually showing what it looks like to build a forecast here in the software. Okay, so it's taken me to liveplan.com. That's where I like to start out here. And when, if you get access to LivePlan through the SBDC, this is where you're going to go. Eventually, you're going to get an invitation to LivePlan to the Indiana SBDC account. And then you'll click on the link in there to accept the invite, and then you'll have your own login to get in here and access a business plan that has been set up for you. So we'll go ahead and click login. Always a good idea to bookmark this login page when you get in there so you can get to your plan quickly and easily. And this is showing me, I work here, so I'm shared on all sorts of LivePlan accounts. So I have an account that I own here and then other accounts that I've been invited to. So this is where you would see the Indiana SBDC account show up here under other accounts. If you do end up setting your account up and taking advantage of that SBDC discount to do that, then we would move your plan from one of these other accounts to your account, and that's where you're going to continue working in the software. So I'm going to go to mine. I have a couple examples here that we can look through. Okay, so let me switch to our bike shop here, and I'll give just a super quick orientation to the software and all the different things that you can do in here. Today, we're really going to be focusing on the financials and on the forecast specifically, but it's good to kind of understand what else you can do when you have access to this tool and how that can help you. So one of the things that you can do is actually just a bigger orientation here. So we have 6 main tabs that we can work in here. So pitch, plan, forecast, benchmark, schedule, and dashboard. Today we're going to spend most of the time in the forecast. We're also going to touch on the benchmarks and the dashboard to show you how all that comes together. But once you have access to LivePlan, you can actually do any of this stuff. So if you want to put together a pitch, you can kind of build a visual summary of your elevator pitch here in LivePlan. You can download that as a pitch deck if you do need to present for investors, or if you're competing in a competition or anything like that. You can also just download that as a PDF summary of your business, which is great to share with employees or potential investors or lenders. Then you can write your full business plan. So this is a business planning software. So the work that you're doing in your forecast is going to pull into your plan, but we'll guide you through writing a full lender-ready type business plan if that's what you need, and you'll be able to download that from LivePlan. Of course, the forecast is where you do your financial projections, so we'll really walk through what to do there. These benchmarks help to give you the industry average part of your financial picture, bringing in those benchmarks so you can see and understand how you compare with other businesses. And then the schedule is all about pulling out action items. So, ideally you'll have your plan and your forecast working in here. And in order to take those from, more static documents and to pull some action items, and again, to kind of coordinate some of your activity, you can do that in the schedule. So this is really useful, again, to keep the team rowing in the right direction, right? Once you've identified where you want to go and how you might angle away from potential hazards and angle towards things that can really help your business, this schedule can help to coordinate all that activity for your team. So you can give it a date and you can assign it to somebody, which helps to coordinate some of that with your team, make sure that everybody understands the vision, where you're going, and they're all paddling in the same direction. And the dashboard is ultimately where you can put all these pieces of the financial picture together. So you can do some comparisons between your actuals from your accounting software with your forecast, and you can look back to that on a regular basis. So I'll talk a little bit about how that comes together. If you are using QuickBooks or Xero, how to get that connected and what that means. And how to use this on an ongoing basis. There's a lot we could dive into with the dashboard, so we have some good resources if you really want to get that set up and use it. I'm going to focus on the forecasting piece today, but I'll show you where to find some good resources if you want to learn more about using that dashboard, because it really is something that can help to give you a strong advantage as a business owner. Okay, so diving into this forecast, I'm actually going to switch to a different business here to show an example. So this is Sweat Equity. This is a gym. We don't have a plan written for this business or a pitch, but we are we just have a financial forecast built, and we actually have some QuickBooks actuals that we've pulled in here to show you kind of what that plan versus actual comparison looks like. And this is a forecast for a gym. And the way that LivePlan puts this forecast together is we give you some financial tables, and those are here on the bottom. So we start with revenue. So where's your money coming from? And then you can put in your direct costs. You can add personnel to your plan. Think about your overhead expenses, any assets that you own or big purchases that you plan on making in the future. You can kind of put in a really basic tax situation here, any dividends you're planning on issuing, and then look at your cash flow assumptions and kind of play with some of the assumptions there, and ultimately put in financing. So if you have existing loans, you can make sure that those are incorporated in your financial model. And if you identify any cash gaps or cash shortages and you need to be looking at funding and applying for loans, you can see how that would affect your financial model by putting that into financing. And as you're putting in all of that information, LivePlan is going to guide you step by step and crunch the numbers for you. So as you're putting in, answering those questions, building this financial model, LivePlan automatically will build you a projected profit and loss statement that you can look at in here. That gets pulled into your business plan. You can download all of this and share it. It's also going to build a balance sheet and a cash flow projection here. And so this is the great part about using a tool like LivePlan is you are just able to put in your guesses and assumptions, and it's going to build the complete picture for understanding your financial statements here. So you're going to be able to see how profitable you are based on this model. You're going to be able to see how it's affecting your balance sheet, and you're going to be able to see what your cash flow looks like in LivePlan without doing kind of separate activities. So it brings everything together for you. Okay, so I'll just show, so this is, about what a completed gym forecast might look like. And so you can see here we have, let's see, 1, 2, 3, 4, 5, 6, 7, 8. So there's 8 total revenue streams that we have built in there. And that's fairly lean and strategic, right? So maybe there are lots of different services that kind of are built into personal training. There are lots of different fitness classes. So maybe in our accounting software, we have a different revenue line item for each fitness class that we offer. But in LivePlan, in our forecast, we want to make that more strategic. We don't want to have to update 10 different line items every time we want to make a change to what we're projecting for fitness classes. We just want to go in there and change one number. So it's much more consolidated. So as you're building your forecast, think about what is important for helping you to change and adjust your strategy. And so one example I'll give is our company at PALO with our software. So we make LivePlan, and that is our primary focus as a business, but we also have some legacy products. So I mentioned that Business Plan Pro is our flagship product in the 90s and the 2000s. We actually still sell Business Plan Pro and other similar downloadable softwares. So we have Marketing Plan Pro, we have Business Plan Pro Premier, we have an academic version. In our forecast for our company, we have one line item that covers all of those legacy products. In our accounting software, we're accounting for each of those, but it's just not an important strategic part of what we're doing as a business. So we lump all those together into one category, where with LivePlan, since that is our strategic focus, we actually have multiple revenue line items just showing for LivePlan. So we have monthly subscriptions, we have annual subscriptions, we have channel revenue in there, different kind of partnership revenue. And so for one product, LivePlan, we actually have multiple different line items here because we need that information to be able to be strategic on what we're going to focus on. So think about your business and what's really important and how you want to put those categories together. And then you're going to be able to build some direct costs into those different revenue streams. add your personnel and expenses. So I'll go through here in just an example to kind of show you how you can build that into your financial model and what that looks like, and that it's pretty simple and easy to do once you get started, and using a tool like LivePlan and working with an advisor to help build this. Okay, and as I'm doing that, Jeff, let me know if any questions have come up so far. We can jump in there.
I have a question for you, Justin, right off the bat.
Yeah.
When you're kind of advising, working through kind of maybe your first ever projection or anything like that, do you have kind of a best practice around that initial forecast, and then like how detailed and how many forecasts should you be making a year? Like how do you do that to make sure that you're planning in a responsible way, but not also getting in the weeds of kind of spinning your wheels, just playing with forecasting?
Yeah, that's a great question. And so when you're building a forecast, it's going to be a little bit different if you're approaching this as a startup versus approaching it as a mature business where you can look back and you have lots of financial information to go off of. So in a lot of ways it's different, but in a lot of ways it's similar. If you are starting a business here, this is a great example and kind of a great page to be at to work through some of those questions is, LivePlan actually asks you what stage of business you are. Are you a new business or are you up and running? And one of the important things to think about in either of those scenarios is, when do you want your forecast to start? That's kind of the first decision you make when you're building a forecast, is when do you actually want the start date of this forecast to be? If you are a new business, our recommendation is starting your forecast whenever you start having transactions or planning to have transactions. So if you are going to start renting your space, or maybe you start your website and you have domain expenses, if you hire somebody, if you buy some raw materials, whatever those initial expenses and transactions are, that's when you want to start the date of your forecast, because you want to be accounting for that spending, those startup expenses in your forecast. If you are up and running, mature business already, we recommend starting your forecast when you start your fiscal year. So if you are on a calendar fiscal year, then you can start in January of 2020. That's when you would start this forecast. And in terms of detail, LivePlan gives you a few different options here. You can have a 3-year forecast or a 5-year total, and you can have 1 year or up to 3 years of monthly detail. For most businesses, especially now when we're not quite sure what's going to be happening next week, let alone next month, let alone next year, probably 3 years of a length of total forecast is sufficient, with 1 year of monthly detail. If you're up and running and you're starting your forecast in January of 2020, you may want to do 2 years of monthly detail, because a lot of those months have already happened. So you're just kind of filling in your actuals there. And so that gives you plenty of time to look forward to the next 12 months and make sure that you're forecasting those. So, for most businesses, 3 years total length, 1 year monthly detail is great. That's going to be plenty, because the further you get out, the harder it is to make good guesses with your forecast. And so you don't want to spend a ton of time doing that. And kind of the really short answer to your question, Jeff, is if you're feeling overwhelmed and it's feeling too complicated, just pause and simplify. Always think simplify. It's better to have a forecast with just one revenue line item called revenue than it is to have a forecast with tons of detail that's so overwhelming that you never want to look at it again. So it's really, lean towards keeping this really simple. And you start by choosing, the length of the forecast and the monthly detail. And if you want to get more detailed, you can always change that later.
That's fantastic. One other question that came through, and this is kind of back to what you talked about earlier when it came to like being able to download and export. Does all of that export like CSV so I can put it in Excel, or how does that if I'm using things like that? How do those downloads work?
Yeah, so I'll talk about how LivePlan interacts or doesn't interact with Excel. The kind of the short answer is it's best to it's most simple if you just start your forecast from scratch in LivePlan and kind of build it in there. Our approach is to kind of get away from the spreadsheet model a little bit and make it more approachable for a broad audience. And Excel is just so easy to break that in LivePlan you can really be confident that you're just focusing on your numbers and we're doing all the math, and you can't break any of the equations. And so it's going to be really easy to kind of do this in the software. There are ways, if you do have a forecast already built in Excel, to get some of that information into LivePlan, and there are ways to convert back to Excel once you've built your forecast in LivePlan. But they work, but they're not perfect. They're not maybe as perfect as you would want. But really the key here is helping you to build this forecast in LivePlan. And then, that's where the bulk of the work is going to be done. And then you can convert it to different formats if you want to.
Perfect.
Okay, so looking at the forecast here, so I just started a brand new company. So we have no data in here. This is kind of what you would see as you're getting started from a blank slate. And you can see our CEO, Sabrina, is giving an introduction video here. And so you can watch that. She does a good job of kind of explaining what to do in here, but I'm just going to go ahead and jump in and get started. If you want to go back and watch any of those videos, if you go to this help drop down, that we have the getting started videos right there. So you can go back and watch those. But now we're looking at a blank financial forecast, starting with the revenue. And we have some instructions here, so you can read through, and this will tell you exactly what should go in here and what shouldn't go in here. And then we also have another video for each component of the forecast. So you can go through and watch those videos, and it walks through what to do here. But I'm just going to go ahead and get started. So the first thing that you're going to do is start adding revenue streams. And now what do we want to call this? So let's say for a gym, this is our standard gym membership. So once you've kind of figured out how you want to categorize your revenue and everything, then you can just start putting in those revenue streams. And LivePlan is going to ask you, what type of revenue stream is this? So are you selling a product? Do you have a service business where you're billing by the hour? Is it a subscription where you have recurring charges? Or do you want to just put in revenue only? Revenue only is pretty easy to do, and if you are working in Excel already, that's probably how you are doing your projections in Excel, is just revenue, strictly the numbers for each month. But whenever possible, we would recommend breaking it down into either unit sales, billable hours, or recurring charges, because that's going to kind of help you to adjust your predictions in here. And so for a gym, we have recurring charges. So especially if you have a subscription revenue model, that's going to be really helpful, because we're going to factor in things like churn rate and sign up charges and things that would be important for that. So for this gym membership, we're going to do recurring charges. So LivePlan is going to ask you, when do you want this revenue to start? So if we're up and running, my forecast is starting in January. So that's when I want this revenue to start, in January. And how many new customers do we expect to sign up for our gym? If you want to just do something really quick, you can just put in an average of what your signups are every month. But really you want to be thinking about trends here. So this is doing a sales forecast. So if we choose varying amounts over time, it takes us to this kind of interactive page. This is where, if you have some data in Excel, you can copy and paste it in here. So if you've already done some projections for January of 2020, you have a row in Excel with all of those sign up numbers, then you can just copy and paste that whole row and it'll populate everything in here. But if you're just starting from scratch, you can just start putting in your numbers. And so January 2020 already happened. So maybe we signed up, 50 members in January, 48 in February, and then March. We all know what happened in March. So you probably had, half of a good month, and then things kind of dropped off. So maybe for March, we're doing 30. And then in April, we're shut down, right? So we had no new signups in May, none in June. And then this is for our standard gym membership. And then maybe in July, we can get open again um, with some precautions for COVID, and maybe we start to sign up some more members. And now we're in September, so we can kind of see, well, where do we think this month is going to close out? And now you're doing some projections and some guesses here. So we're looking at the next few months of the year. What do we think is going to happen here? And we can go in here and put in our prediction. So next month, things seem to be going strong. We're getting some traction. So maybe 25 in October, 28 signups in November, and then December we'll have, maybe that kind of drops down a little bit because people are distracted for the holidays. So we can kind of see what the total is for that year, and then we can start making some guesses for what we want 2021, 2022 to look like. Again, for this forecast, I just picked 12 months of monthly detail, and so these next couple of years are just going to be annual highlights. So maybe we hope to get to 400 and then 450 in 2020. And now LivePlan's going to ask some more questions. So do you charge an upfront fee when you sign people up? Let's say no, we just let them right in. What is our gym membership cost? We'll say it's $99 per month. And then it's going to ask you your churn rate. So the churn rate is the percentage of existing customers that you have who cancel. And so this is a great place to kind of look at that market research. If you've been in business for a while, you can look back and see what your historic churn rate was. Think about what's going to happen in the future. For this gym, we would probably do varying amounts over time, right? We probably had a fairly stable churn rate, and then in March, things went up, and then in April, we really had, a lot more cancellations than we normally have, and then, we might expect to see that start dropping again in our forecast here. But maybe, we're hoping around December, we can actually start to get back to normal and, ultimately really improve that and start to thrive here in 2021, 2022. Okay, so we've just gone through and answered a few questions, and now we have this revenue line item in our gym model. So we can go ahead and add other revenue streams here. So maybe we have apparel that we sell out of our gym, and that's going to be unit sales rather than recurring charges. And we can think about what we want that sales forecast to look like for apparel. So maybe on average we sell, 50 pieces of apparel. And maybe we started selling online. So maybe our apparel didn't quite take a big hit when our gym shut down. We started pumping a lot of effort into that marketing. So we had a bit of a drop, but things responded pretty quickly. And now we're really focusing on that because it's helping to kind of boost our numbers a little bit. And so we're hoping to keep growing that here in the future. So maybe 700 and 800 for the next year. So now we have our apparel line item. Maybe we sell each piece of apparel for about $50 per item on average. And again, we're not getting into like all the t-shirts, sweatshirts, kids' clothes, men's, women's clothing. We're just putting apparel because that's much easier to manage than getting super granular there. So that's revenue. And then we can move on and do a similar process for direct costs. So you can just put in your direct costs here. And what do you want to call this? So it's easy to do direct costs for our apparel, right? Because we know kind of on average what we're spending for those items. And we can tie that to a specific revenue stream, right? So if we have cost of goods for apparel, we want to connect that to our apparel revenue stream. And the easiest way to do that is to calculate a percentage of that stream's revenue. So this is basically your gross margin here. And that'll just follow your apparel sales as you go. So once you kind of set this in the model, it's going to calculate everything for you. So let's say we mark our apparel up about 50%. So we'll put that in there. So now we have our direct costs that follow our apparel, and maybe we do have a gym membership direct cost, but it's going to be a lot lower. Maybe we just give out kind of like a water bottle and a towel to new gym members. And so that's a little bit of a direct cost for that. So we can put that in our standard gym membership, and maybe that's just 4% of our gym membership and direct costs. And so a direct cost, LivePlan will walk through what that is, what it isn't, but essentially it's anything that you have to buy in order to sell your product. So each time you make a sale, what what did you have to purchase in order for that sale to happen? So it could be inventory, or you could have direct labor. So you might have a salesperson who made commission on that sale. So you would want to categorize that as direct labor. And again, that's important because it helps you understand what your gross margin is on the products that you're selling before you have your expenses. All right, so now personnel. So thinking about your staffing here, so you can put in all the different personnel that you want to in here. For this example, I'll just keep it really simple and just say this is a group of employees and this is our staff. So probably, we may have had some staffing changes within the last year, and we expect to have some changes in the future. So we can pick varying amounts over time. Again, we should know, how many employees we had in January, February, March. Maybe we got a PPP loan, so we were able to retain all of our employees until about June. And then in June, we really started feeling, the lack of revenue from those gym memberships. So we had to reduce our staff, and maybe we got down to 16 this month. But we're hoping to keep, retain all those 16 employees. And then towards the end of the year, we hope to start building back up. And so in 2021, we hope to get back up to our 20 employees, and then we're growing. So, maybe we want to put in 25 for the next year, and this is our staff, right? So LivePlan is going to ask, do you want them as direct labor or regular labor? Let's just say in this case, this is direct labor. So, or regular labor rather. So they're not tied to a specific revenue stream. We're just going to pay them their salaries here. And you can just choose kind of an average salary for whatever group of employees this is. So let's say we want to do per year, and this is 60,000 per year. And these are on-staff employees, they're not contract employees. So now we have our employees in here. You want to make sure that you're setting a burden rate. So we give you it's kind of a standard burden rate of 20% if you're paying any benefits that might be around where you're at, but you can always move that up or down depending on the actual burden rate that you have for your employees. And then we can go in here and start adding expenses. And again, this is a really simple model. You can get through this pretty quickly, then you can build on it and add more detail from there. So let's say this is the rent for our gym. We're renting our gym. And we want to make sure if this is rent that we're choosing this option in LivePlan because it's going to show us in the benchmarks kind of how that compares with other businesses. And you can tie this to a revenue stream. You can do a constant amount. So I assume rent would be pretty constant. So let's say maybe we're spending $2,000, actually, let's say $5,000 a month for rent. And we started that expense in January. So now we're thinking about our overhead expenses. LivePlan will also categorize your marketing expenses. So we can put in marketing, and you can put in a category for everything that you spend money on here. That's not a direct cost, but you can choose marketing in LivePlan. And again, that'll compare it with other businesses. And for marketing, I always recommend putting this as a percentage of overall revenue. Really simple. And that way, as your revenue grows, you kind of have a budget set for what you're going to spend on marketing. And so the more money you have coming in, you can, automatically start thinking about, okay, what do we want to do with that? Where do we want to put our dollars for marketing in order to keep this momentum going? So let's say we spend 7% of our overall revenue on marketing, and we're doing that in January. And then of course, any assets that you have, you can put those in there. I'm not going to go through that now. So we'll move on to tax rates. So you can estimate your tax rate. If you have sales taxes, you can estimate that. So we can just put that into our model here. Again, you can kind of do some research, figure out what the average is. If you have revenue line items that have sales tax, you can account for that. We don't have sales tax here in Oregon, so we can just skip that. And then dividends, if you plan on issuing dividends at all, you can represent that here. Ultimately, we're going to get to cash flow assumptions. And so the model that I've built for this gym, based on the expenses I put in and my staff, I'm really not profitable here. So this isn't super helpful, but if I switch back to our standard, our pre-built forecast here and go to cash flow assumptions, this is a little bit more realistic. So we can really see how much cash this business has in the bank every month based on all the assumptions we put in. So if you're an up and running business, then you can see, look ahead and make sure that this is making sense, that you have cash in the bank every month, seeing how all that's being affected. If you're a startup, what you're looking for here are red bars, right? Showing that you have negative cash. And of course, you can't have negative cash as a business. So that means you're out of business, you're bouncing checks. So if you see some red bars in here, you can think about, okay, do I need funding? How much funding do I need? When do I need it? And you can build that into your financial model. So, back to that rafting analogy, as you're looking 100 feet forward with your boat, this is what you're looking for, right? Cash flow shortages. This business looks great, right? We have $500,000 of cash in the bank at the end of December here. But if you see any low periods and any red bars, those are rocks, right? So those are things that you want to plan for and really make sure that you have a good strategy to avoid that, and either get a line of credit, get a loan, call some vendors to try to negotiate payment terms. This is where you can kind of scan ahead and make sure that you're in a good position in terms of cash. And LivePlan lets you set your accounts receivable and accounts payable, and those are some things that are going to affect your cash flow. So it helps you kind of to choose how you want to manage those things and see what can help you to avoid that shortage. And then we have financing, so you can put in your loan here. So I'm not going to add a loan, but that's kind of the process that LivePlan is going to take you through. And again, it's going to build that comprehensive forecast for you to look at. And once you've built that forecast, then you can click on this is the name of the forecast here, and we can create new forecasts based on the ones that we built. So we can copy an existing one. We just made our original forecast, so that's kind of our baseline. And now we can play around with some different scenarios. And to answer a question that Jeff had earlier, how many scenarios should you build? It kind of depends on what you are looking to do, how much time you have for this, how complex your forecast is. I would always recommend building at least 3 different financial scenarios. So one is kind of what we just built, which is your best guess. And you're probably going to naturally be a little conservative there. And that's a forecast that can be your working forecast. So as you look at your actuals, as you get more information, you can incorporate that and change those forecast assumptions so that you're always starting with your good baseline and really using that to make decisions. The other forecast scenario that you should think about is a growth scenario, or what you might call a best case scenario. The best scenario I've ever seen this called is I'm going to buy a boat scenario, and that's something that it really spoke to me. And so, hey, this business owner wanted to see, hey, what is it going to take to get my business to the point where I can buy a boat? And he was able to build that full scenario and use that as kind of that aspirational type forecast. If everything goes really well, if we're able to pivot here and make some good decisions, then this is going to take us where we want to go. And then the third scenario is, what you might call a worst case. I would call it a stress test. So build that scenario and see what happens if things don't go well. What happens if our sales don't come back as quickly as we think they're going to, if we don't get approved for that loan. And so that stress test can help you understand, and feel a little bit more secure, just kind of knowing that you have a scenario for if things don't go well. And so you can do that in LivePlan, just kind of copy those scenarios, change your assumptions in here, and have that other forecast built.
This is awesome. So easy to use. I wish I had this for forecasting years ago. So Justin, we don't have any other questions in the panel at the current moment. But like all of these webinars, we've got, these will be posted on the website, on the ISBDC website as a resource, but also I'm sure I'm speaking for myself, but I'm sure I can speak for Justin too, that if you have any questions that the ISBDC team can't handle on the LivePlan side, that we can get in contact with you directly to ask some of those questions as well.
Yeah, definitely. So thanks everybody for the time today. It was really great to share this content. Like Jeff said, I'd love to answer any questions that you have. Your SBDC advisor can really help you to use this tool as well. And then, as questions come up as you're in here, you can also chat with our support team to get, if you have a burning question that you want an answer to right away. We have a great support team here. They're very friendly and knowledgeable. And really, particularly with the financials, if you get stuck anywhere, you're not sure, like, how do I make this apply for my business? They can kind of walk through your specific scenario and show you how to do that. So view our team as an extension of the SBDC in terms of helping you be successful using this tool.
It's perfect. Justin, thank you so much for taking the time today. I know it's early out your direction, so thanks for getting up and walking us through this. As always, we'll be back here next Friday at noon to talk about business pivots. So we've got a company coming in that had to make a big pivot that will be walking through that pivot that they made and how they got there and why they did it. And so we'd love to see everybody back then. And outside of that, have a great rest of your week. And thanks again, Justin, for being with us.
Yeah, thank you, Jeff. And thanks for everybody. And hope everybody has a great weekend.
Thanks all.